Did you know that multifamily investment volumes in Canada rose over 20% in 2025? This surge is expected to continue as rental demand remains robust, particularly in cities like Toronto, Calgary, and Ottawa. Welcome to the Multifamily Real Estate Insights Podcast. I'm your host, Sandy MacKay. Let's get right to it. As we look ahead to 2026, global capital is once again flowing into Canadian real estate, positioning the country as a top destination for investors seeking both stability and yield. According to the Colliers 2026 Global Investor Outlook, institutional players who had previously stepped back during market turbulence are now returning, drawn by Canada's resilient fundamentals and persistent supply constraints. Reed Taylor, Senior Vice President of Capital Markets at Colliers Canada, points out that while fundraising on the equity side is still below prior peaks, lenders remain open for business for the right products. Following a lull in transaction activity in 2025, a lot of dry powder has been sidelined, he said, but pressure to deploy remains, which bodes well for investment activity to improve next year. The report also highlights a strategic shift among investors, with nearly half now favoring direct investments and separate accounts over traditional funds. Platform joint ventures and mergers and acquisitions are gaining traction, while private equity is increasingly targeting both property-owning entities and operating businesses. Damian Harrington, Director and Head of Research for Global Capital Markets and EMEA at Colliers, notes that this imbalance is prompting investors to rethink their market engagement strategies, opting for structures that offer faster execution, flexibility, and scale. Canada's appeal is further bolstered by strong demographics and a supply environment that is tighter than most global peers. Adam Jacobs, Head of Research at Colliers Canada, explains, "It's not easy to develop here, which means we're much less overbuilt in basically every asset class." This limited development outlook supports the argument for investing in Canada, as many areas present a clean slate without the competition seen elsewhere. Focusing on sector trends, multifamily investment volumes have seen significant growth with expectations for another active year. Rental demand remains strong in major cities, and this trend is expected to continue. Retail, particularly grocery-anchored and necessity-based centers, remains a core focus for institutional investors due to consistent income profiles and scarce new construction. Meanwhile, industrial and logistics assets continue to perform well, especially in urban infill and small to mid-bay facilities. Institutional capital is also showing signs of reactivation, with Canadian pension funds and major landlords shifting from development-heavy strategies towards stabilized, income-producing assets and platform-level partnerships. Public-to-private opportunities are expanding, with several REITs trading below NAV and strategic buyers exploring privatizations and joint ventures. Despite Prime Minister Mark Carney's caution that the Canadian economy could shrink nearly 2% in the coming years if growth fails to keep pace due to United States tariffs, Canada's fundamentals remain robust. Population growth continues to outpace most advanced economies, and the persistent housing undersupply keeps multifamily demand elevated. With improving financing conditions and normalizing interest rates, both domestic and international investors are poised to re-enter the market more significantly. The year ahead is expected to reward investors who can combine speed with strategy. According to the Altus Group Investment and Transactions Quarterly Report, the multifamily real estate market in the United States continued to shine in the third quarter of 2025. Multifamily sales volume surged to a staggering $45 billion, marking a 35.4% increase from the previous quarter, and a remarkable 51.1% rise from the same period last year. This sector led the commercial real estate landscape in both the number and total dollar value of properties sold, accounting for 30% of all U.S. commercial real estate trading activity by dollar value. Other commercial sectors also showed significant gains, with the commercial general sector seeing a 48.9% increase and office properties growing by 28.0% compared to year-ago levels. However, multifamily properties stood out with the fastest rate of price growth, as per square foot prices rose by 17.3% year over year to reach $144. On a quarter-over-quarter basis, The median transaction price per square foot for multifamily was up 3.5%, trailing only the hospitality sector, which saw a 4.3% increase. The median multifamily property transacted in the third quarter was 9,829 square feet in size, carrying a median value of $1.7 million. This median transacted value has been on the rise since early last year and is approaching the levels seen in 2021 and 2022. It's interesting to note that the median property size has been increasing since a recent low in the first quarter of 2024, although it remains below the peak from 2017, when the median size exceeded 13,500 square feet. The report also highlighted differences among the top metropolitan statistical areas by population. The New York City MSA led the charge with a year-over-year price growth rate of 28.6%, followed by the Philadelphia MSA at 21.5%. On the other end of the spectrum, Washington, D.C., experienced the largest decline, with its median price per square foot falling by 30.4%. The highest price per square foot was recorded in the Los Angeles MSA at $301, narrowly surpassing Miami, which was last quarter's leader at $286. Meanwhile, the Houston MSA recorded the lowest price per square foot at $110. These findings underscore the dynamic nature of the multifamily sector and the varied performance across different regions. As investors continue to seek opportunities in this thriving market, it's crucial to stay informed and adaptable to the shifting landscape. The full Altus report provides further insights into other property types and regional trends. The multifamily market continues to demonstrate its resilience across the United States, and Detroit is no exception. The positive sentiment was palpable at the 6th Annual Detroit Apartment and Multifamily Summit, held by the Michigan Real Estate Journal on November 14th at the Community House in Birmingham, Michigan. Panelists, including some of the most prominent figures in the Detroit area multifamily sector, highlighted the robustness of the local apartment market in the metropolitan area. A significant factor contributing to this strength is the challenges within the single-family housing market. As single-family homes become more expensive and mortgage interest rates remain above 6% for a 30-year fixed-rate mortgage, many potential buyers are turning to renting. However, it's not just necessity driving the market. The renter-by-choice demographic is also growing, with many opting to rent as a preferred alternative to purchasing a single-family home. This trend is providing a substantial boost to the multifamily market in the Detroit area. The summit wasn't just about discussions, it also offered valuable networking opportunities, with attendees able to earn 3 hours of continuing education credits. The event kicked off with the Detroit Multifamily 2025 Deals, Demand, and Submarkets to Watch panel. This session featured insights from industry leaders such as Christian Zakiowski, director at Newmark, Matt Temkin, co-founder of Greatwater Opportunity Capital, and Andrew Kuhn, founder and CEO of Sunrise Communities, among others. The panel was moderated by Alfredo Casab from Dada. Another engaging session was the Build, Reposition, Operate 2025 Development and Design Trends panel, moderated by Reshma Sambare, attorney and counselor at law at Miller Canfield. Speakers like Michael Porras, founding principal at McIntosh Porras Architects, and Clark Lewis, director of urban investments at Redico, shared their perspectives on the evolving development and design trends. The Capital Markets 2025 Challenges and Opportunities panel provided deep insights into financial strategies and market dynamics. The panel, moderated by Mark J. Bennett, included Adam Gould, Senior Vice President at BWE, and Kevin Kovacevic, Principal at District Capital, among others. They discussed the financial landscape and what lies ahead for investors in the multifamily sector. Events like these underscore the dynamic nature of the multifamily market and the importance of staying informed and adaptable. It's clear that the multifamily sector is thriving, and with the right strategies, investors can continue to find lucrative opportunities. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.